This is probably the most valuable TradingView indicator ever. It has nearly a 70% win rate and it does not repaint. What's more, the strategy made over 650% in the backtest. Hello traders! Welcome back to the Switch Stats channel. Today we will be going over one of the most complex, but at the same time smartest TradingView indicators I have come across up until now. In this video, I will explain what polynomial regression means and how you can become a better trader by using polynomial regressions to predict the future of the price of an asset. Please leave a like on the video and subscribe to the channel because this will be a mind-blowingly interesting video for any retail trader. Before we start, I would like to thank Donovan Wall for the making of the indicator, and for the full explanation, I will be heavily paraphrasing his explanation. Now let's first try to understand what a polynomial regression is. In some sense, it is the same as a linear regression. If you don't know what a linear regression is, don't worry. Let me explain it to you. A linear regression in its most basic form consists of three lines that form a channel. The middle line is called the linear regression line, the upper channel line is this line right here, and lastly, the lower channel line is this line. So if you look at it in its most basic form, the linear regression line is actually just the average of the price action. Now what's great about the linear regression line is that it will show you the trend that the market is currently in. If the line is horizontal, it means that the market is moving sideways. If the line is leaning to the upside, then we are in an uptrend, and if the line is leaning downwards, we are in a downtrend. If the standard deviation isn't something that you still know the meaning of since you left school, there is no need to worry. The only and probably most important thing you need to know is that the lines are calculated so that most or around 68% of the price action will fall in between them. So whenever the price is above or below the linear regression lines, you can assume that the market is oversold or overbought. Just like with the RSI indicator. So, now that you have a clear understanding of what the linear regression channel is, let's now dive into what the polynomial regression bands are and how you can use them to make an insane profit. In a simple linear regression, we predict the value of variable y based on another variable x. So x is the independent variable and y is the dependent variable. Because y is dependent on x, but x isn't dependent on y. I know this might sound confusing and as if it has nothing to do with trading, but I promise that if you keep watching you will thank yourself. To simplify, let's use an equation. Y equals mx plus b, or we can convert this into a practical example. Profit equals m times years of experience plus b. So in this case, a polynomial regression formula will model the relationship between the independent variable x and the dependent variable y as an nth degree polynomial in x. So to circle back to trading strategies and indicators. Let's say that the profit we make trading versus the number of years of experience looks like this. If we use linear regression, the line would look something like this. However, this of course results in a terrible fit. But by using a polynomial equation, we will get a much better fit. So that is the difference between polynomial and linear regression. I hope you understand it better now. Now that we have gotten all of that out of the way, let's set up our TradingView chart and start entering positions. First, head over to TradingView. Now, choose an asset you would like to trade on. For the sake of the video, I'll be choosing the BTC-USD pair. However, this indicator can be used on any asset or pair as long as there is enough liquidity and volume. Now that we have chosen an asset, change the timeframe to the 5-minute timeframe. But like I said previously, this strategy can work on pretty much any timeframe. That was all that we needed to do to configure the chart. We will now add the indicator to the chart. Navigate to the Indicator Search tab and search for the polynomial regression bands and select the indicator made by Donovan Wall. That was the only indicator that we will be adding. The indicator can be used in many different ways, and there isn't really a right or wrong way when it comes to using the indicator. However, for the sake of the video, I created a simple strategy to show the potential that the indicator has. For the strategy, we will need to add one more indicator to the chart. So head over to the Indicator tab and search for the ADX indicator. Select the default ADX indicator made by TradingView. We will be keeping the ADX indicator settings the same, however, we will change the polynomial regression indicator settings for this strategy, so head over to the Settings menu and navigate to the Inputs tab. Then change the data smoothing value to 200. That's all that we needed to change. Now, click on the OK button and close the tab. Finally, add array at the 30 value of the ADX indicator. That was all that we needed to do. Now let me show you when to enter into a position according to the strategy. But before that, please leave a like on the video and subscribe to our channel so that we can keep making these free videos. Thank you for understanding. Let's first look at when to enter into a buy position. Firstly, the price needs to cross back above the lower band. Secondly, we will be using the ADX indicator as confirmation. The ADX will need to have recently been above the 30 line. This means that the market volatility is high, indicating that we are currently in a trending market. Now we will enter into a buy position. We will place our stop loss at the recent swing low. We will put the take profit at the recent swing high or when the price reaches the upper band again. As you can see, the trade was indeed profitable. Now let's take a look at when to enter a sell position. Firstly, the price needs to cross back under the upper band. Secondly, we will be using the ADX indicator as confirmation. The ADX will need to have recently been above the 30 line. This means that the market volatility is high, indicating that we are currently in a trending market. Now we will enter into a sell position. We will place the stop loss at the recent swing high. We will put the take profit at the recent swing low or when the price reaches the lower band again. As you can see, the trade was indeed profitable again. Now let's get into the backtest. Sadly, as you can see, I could only go back for around 16 days. This caused the backtest to be relatively small at 23 trades. So please take it with a grain of salt. Our next backtest will be at least 100 trades. So without further ado, let's check out the results. As you can see, we entered around 1 to 2 trades per day. We entered a total of 23 trades and got a win rate of 69.57% with 16 wins and 7 losses. The total gain on the account with 10x leverage was 658%. We also didn't make use of order pyramiding. Please remember that this is one of an infinite amount of strategies that can be made with the polynomial regression bands. I hope we could help you out with this strategy. If we did, please leave a like and subscribe.